welcome to Nairobi, the capital city of East Africa's biggest economy, Kenya. This is the only city in the world that hosts a national park right at the heart of the capital. And with a population of 4 million and the highest concentration of Kenya's burgeoning middle class, Nairobi contributes 60% to the country's economy of $40 billion US. The country's annual growth rate of about 5% far outpaces that of major economies.
Kenya seems to be the leader in Africa in terms of e-commerce, in terms of platform. And it's for that reason that PayPal has made Kenya to be the second country of choice in Africa after South Africa, and the first country in Sub-Saharan Africa to be enabled to be able to withdraw PayPal balances through bank accounts.
Kenya is very, very good market. Our experience, based on our experience, we see that the market is growing very, very fast, the e-commerce market. We see a lot of startups developing solutions. This is a very innovative country. And the more people will develop product, services to connect the people, the merchants, the old merchants to the new market, they will contribute to this move. And I see very nice numbers in the e-commerce in Kenya. Of course, you cannot compare it to the mature market like the US or UK, but the growth rate is much higher.
The thriving private sector is large by sub-Saharan African standards, and the well-diversified nature of the economy has enabled the East African nation to weather external shocks such as the 2008 global financial crisis and falling commodity prices in 2014.
The Kenyan private sector is in good health. It is vibrant. It's very entrepreneurial. The downside is that there are some recurrent challenges. So there are some persistent challenges which the private sector is facing, which is preventing it from reaching its full potential. So if those are removed, Kenya will really stand to reap some great dividends from the perspective of a growing and successful private sector.
Agriculture is a key pillar of the economy, contributing 25% to Kenya's gross domestic product. Tourism is a key foreign exchange earner at slightly above 10%, as well as the manufacturing sector. But it is the newfound natural resources, oil and gas, that has created a lot of excitement and a surge in foreign direct investments, with the global spotlight turning to the East African nation.
We looked at cumulatively what the East African community has attracted over the past 10 years, and it is half of what Nigeria attracted in the same period. So clearly, it tells you that there is a potential there for the community, partner states, but also the community as the Secretariat, to come together, harmonize their investment strategy, their investment policy, and harness in all those resources that are coming in. What we're observing at the moment in the region in terms of foreign direct investment is it's not exclusive to the extractive sector. You know, in Kenya, a lot of FDI up to today, or let's say 2013, for example, has focused on financial services, telecommunications, ICT.
However, investors in the extractive sector are cautious of the unpredictable operating environment, posing a high risk to the cost of doing business in the region.
If you look at the current royalty rates, they are quite significantly different between the three countries. Tanzania is very favorable in its royalties. Kenya has gone to the other extreme end, where its highest royalty on diamonds is 12%. So there's a big difference there.
Innovation has been another major milestone for Kenya. Mobile money transfer services such as Safaricom's M-Pesa, EcoPesa from Telkom Orange, and India's Airtel Money have helped to increase financial inclusion in Kenya. Banks have also devised groundbreaking initiatives such as agency banking, where banks approach established businesses to become their agents.
We see now the agents are doing more business. They're transacting more than all our branches put together, all our ATMs and other electronic delivery channels.
If you look at our business overall as banks, now not as KCB, we believe that today we have 30,000 agents overall. We believe that in 5 years, we will build 300,000 agents.
Trade within East Africa has been enhanced with the region's move to eradicate non-tariff barriers within the bloc. Last year, it took 21 days for transit cargo from the port of Mombasa to reach Rwanda and at least 15 days to Uganda. With the launch of the single customs territory, that time has been slashed by a third.
Imagine a lorry driving from Mombasa all the way to Burundi will not be stopped by Kenya, not by Uganda, neither by Rwanda, will go straight to Burundi. So for a Burundian trucker who had to submit themselves to all these jurisdictions, now just drives as if when you drive from Nairobi to Kakamega or you drive from Nairobi to Nakuru, you are within one jurisdiction and you just drive through.
The government has embarked on ambitious projects to retire thermal-generated power in favor of much cheaper sources of power. At least 340 megawatts of power will be added to the grid this year, mainly from geothermal sources, reducing the cost of electricity by 40%.